once again, happy Monday. Appreciate you guys all being here. Hope you had a good weekend. It's important to make sure to take some time off the charts when we finish trading day, or obviously as we start the weekend. I can't tell you how important it is. So, Licketh, what's up? I would mentioned on Saturday I went to the beach. My family, we usually have an annual beach party. And I just kind of share it just so you see, like, you got to get out, you got to do things. It doesn't matter where you are in your journey. If you're starting out, if you're, kind of in the middle of the whole thing, or even if you're, someone who has like, 30 accounts and you're banking a lot of money every month trading, like, it doesn't matter. You still have to take time to get off the charts and to experience life and, fill your cup, right? Spiritually, fill your cup, psychologically, because there's more to life than just the charts. The whole point of the charts is to trade to give us the time freedom, right? And when we're starting off, we're obsessed trying to learn, trying to figure everything out. But once you kind of figure things out, that's where you got to start to separate yourself now, right? Understand the time management piece of, like, hey, I trade from 9:30 to 11. And if I don't get any trades between that time, like, I'll journal and then shut it off, and then I'll move on with the rest of my day. If you have other commitments and things like that, like, for me, like, I like to do these live streams. Like, this is another commitment for me. You stick around and you do the commitment. Maybe you want to listen to me talk, or you want to listen to Ash in his live streams, like, or even other people too, right? There's a lot of other people that live stream, but if you take that type of content in, that's fine. But just make sure you give yourself some time as well and some space from the charts. So I had a really good weekend. Got lots of sun. The weather hasn't been like super, super warm per se for us, and I'm in Toronto, so the water was like, it's like just a lake north of Toronto. It's very cold, so I didn't really go in the water or anything, but definitely hung out on the beach and caught up with some family that I haven't seen in a while, and yeah, just had a good time overall. So let's talk about the charts. Let's talk about what we're going to do today. So we'll do a quick top-down analysis. We'll ask the question, were longs valid? And then I'm going to go through a bunch of IFVG setups that I noticed and I saw. And I did ultimately end up taking one. I called it out. I even called out the ones I didn't take. And then we're going to discuss, just like very briefly towards the end, we'll talk about, as you guys all know, I love talking about mindset stuff and strategy. But I found a book called The Daily Trading Coach. I started kind of, going over it online. But I found someone who kind of put a whole bunch of notes together for this chapter 3, psychological well-being, enhancing your trading experience. So we'll just kind of touch upon some of the points this other person had made at the end. So, and if you have any questions, feel free to just drop it in the chat. I have it open. We can talk about things. If you have charts you want me to look at, or whatever the question is, there's no there's no barrier there. So just feel free to drop it. And if you don't, that's cool. And like I said, I really appreciate your time today. We are recording, so hopefully everything doesn't glitch out on me. Sometimes these sessions glitch and then I can't upload it. But I am recording it, so I will post it to my YouTube channel. And I mentioned actually on Twitter yesterday that I'm going to be sharing every single video I've ever created, like I've ever recorded with the live streams inside AshCap Discord. I'm going to make them publicly available, like, on my YouTube, so you don't have to be in the Discord to access it. And there's like I didn't even realize how many live streams I've actually done, especially like for this year, right? Like I'm doing about on average like 2 a week, and we're almost at the end of August here, so it's like I've been doing a lot of live streams. So I'm gonna post all of them. They won't be like, I'm not sure if I got them labeled properly in the description. I think I have, but that will obviously help you to understand, like, if specific live streams might interest you more than others. But look out for that. I'll make a post about it when I do it. So let's talk about NQ. Let's talk about what happened today. I'm gonna clear everything off of my. Actually, what I'll do is I'll keep this chart open on MNQ, because if any sort of level gets tagged that I have alerts set for, we could kind of take a look at things in real time. It is lunchtime almost, so in terms of like trying to catch trades and things like that, probably not the most favorable thing. Let me just set these alerts up here. Okay, perfect. Okay. All right, let's use NQ. I'm just going to close this, and I'll close this. Okay, there we go. All right, so let's rewind this all the way back to the open, and let's look at what happened here. Okay, so the first thing we'll talk about is, every day I show up to my desk to work, usually around 8:39, and the reason I do it is because sometimes you're going to get these sweeps of overnight session highs and lows, and I find that they can be very, very beneficial in terms of catching that early trade. Tracy, what's up? I appreciate your time. Hope you're having a good day at work. And for me today, I actually woke up late. My kid was up in the middle of the night. Doesn't matter the reason. I didn't really get a good sleep in, but I ended up waking up too late. I think I actually got up about 9-ish, maybe a little before. So by the time I got to my desk, I had already noticed I missed this Asia sweep. So if you look at it right here, you have the Asia sweep right here, and you can see the indicators showing the setup, right? Really nice IFVG that's set up here. I think this was about, okay, so about 11.75 points. Really nice size. It is pre-market. It's not like a complete V shape, but the thing with these IFVGs, which you got to look at, is you want to see if there's a good reaction or some sort of an instant reaction coming off the key level that we're using. So if we're using Asia low here, you want to see, you don't want to see price really closing below Asia low. You want to see price respecting Asia low and sweeping it. And look, you got loads of sweeps. This is fine to me. The next thing you want to look at is when the IFVG finally confirms, how does it confirm? What does the candlestick look like? And you can see right here, you have a nice, strong, bullish engulfing candlestick, one singular candle confirming this thing. So this is a pretty good setup. It confirms at 852. The thing that's really interesting, though, is what happens after, because look at the chop inside of this. So if you're someone that takes a trade like this, right, let's say you market order here, your stop loss, I mean, it depends. Most people, when they use it, there's a couple ways that you go about this, right? You can either place it kind of right below, you could kind of place it at a swing point, or you can even use, say, what's commonly referred to as a protected swing, even though I don't even know how it would determine what's a protected swing. So I'll just use the swing low. But I also identify it based off points, right? So if I see it's 25 points at the swing low versus, if I was to go here, it's 14 points, and if I go here, it's about 20, I might just make it right here, okay? The other thing you can do is start to look at where the TP is, right? Where is the nearest drawn liquidity? So if we're looking to the left, right, you have this swing point here, which is fine. I wouldn't really, it's too close to the entry, so I wouldn't really be wanting to make it break even per se, but it is a swing point. So I'm just going to actually change this from BE. I'll just change it to draw liquidity. But you can also see that there's FVGs right here, right? So I'll just kind of combine that. So you got an FVG here, and then you have another FVG up here, right? And then you can see a couple of swing points here in the daily EQ. So if you're kind of targeting things, these are the three levels that are immediately in your path. Now, how do you go about trading this? So once again, Asia sweep, perfect, happens pre-market, that's fine. I'm okay with that. Is there SMT? I don't believe there was any SMT here. Let me just go to a higher time frame just to double check. Okay, so it is showing that there's SMT right here. It's kind of a wonky SMT though. Okay, so it doesn't show on the 15-minute. Shows something wonky here on the 5-minute. But even if there isn't, that's fine. What we can also see is this wick here that sweeps. It starts to sweep into like a busy here, and you know that you have the end wog right here. So I'm just going to mark that as well. Okay, so you have the end wog down here. But you can see there's an FVG here, right? It's kind of combined within the end wog. So it taps into that as well. So really good placement to where you want to see setups form from, right? Higher time frame level swept inside of a bullish FVG in this case, and then you're looking for good reaction off of the Asia low, and then you're looking for strong momentum confirming that IFVG, right? Whatever terminology you want to use. But the key word here is respect to the line, or the key phrases are respect to the sweep and strong momentum closing through the FVG to confirm the IFVG. So you get that. Then we start to identify these levels once again, okay? So as price starts to move forward in this trade, it looks like Imran took the trade, got out BE. Yeah, and I had kind of mentioned this, so I'm just going to go back to my thread, our channel, and I mentioned it here, right? 9:10 in the morning, NQ Asia has, NQ Asia sweep pre-market, just watching it. Like I said, I'm not going to force myself into the trade if I've already missed the trade. And this is something that, as traders, we have to learn to understand about ourselves, right? The FOMO, the panic. Like I saw this and I was like, oh, I missed the setup. Did I have a chance to enter? Do I still have a chance to enter, right? Thing is, if you missed it, you missed it. It's okay. The New York Open is still around the corner. You got to give yourself that grace, okay? Don't put yourself into stupid situations and start entering trades unnecessarily for no reason. Out of FOMO, out of panic. So I just mentioned, I said, hey, I'm just watching this thing. And then I went on about my day, started marking some key levels, and then I finally was able to share it about what I was looking for. Okay, now let's just go back to the chart for a sec. How do you play this? Okay, let's talk about strategy here, because often when we look at trades, a lot of people don't really talk about like the strategy involved with how to play the setup. Most people just say set and forget, 1R, or stop loss, or 2R, or stop loss, or in this case we're going to talk about like how do you move your not how, but when do you move your stop loss to break even? What levels are you looking for in order to be more defensive minded? Or maybe you're skimming profits. Like how do you skim profits? Where do you skim profits? So let's talk about that. So you get the setup, market order entry comes here, 852. Depending on where your stop loss is placed, at minimum, it has to be below the IFVG, right? So you can look at all the traffic down here, and you can use specific candlesticks, or maybe it's a point thing. But for me, like I said, I saw 25.25 points. I thought I would probably have just put it down here, just to give myself extra wiggle room, because it is pre-market. And then if you look at the range, Asia had a 62-point range, London had a 70.5 point range. You're talking about 132 points in terms of the actual overnight range. Not very much. So you don't know what type of volatility is in store for a New York session. Typically you do get more volatility when the overnight session is pretty boring like this, but there's no guarantees. So when you're playing this, I would think, hey, just give myself a little bit of extra wiggle room. It's only 25 points. Let's look at where the nearest draws on liquidity are. So you have a drawn liquidity right here. You have the busy here, and you have another busy here, and then we have our swing points up here with the daily EQ. So as price starts to move in this space here, okay, the way I would have probably done this is I wouldn't have touched this trade, and I might have exited early. Okay, so this could be like your hard stop loss, but your soft stop loss could be here. So if I started seeing candles closing below the IFVG, I would have just exited early and just said, that's not ideal, right? We all know IFVG setups have to respect the IFVG itself, and if you start getting closures outside of it, then that's not really what you want to see. Okay, so hard stop loss from a defensive perspective, if I start seeing closures below, I would just exit. But you're seeing respect to the IFVG, and then you're starting to see higher lows starting to get formed here, right? And you got higher highs here. Now, this drawn liquidity gets tagged right about here, okay? But then look at what happens. The EQ of the IFVG is starting to get respected. So you're starting to get this like coiling of price action, but it's still showing you strength, right? Then you start seeing this candlestick here, right? And in the last session, I had mentioned about studying candlesticks, like understanding which candlesticks show strength, which candlesticks show weakness, which candlesticks show indecision. It's really important to understand this because there's so much of a story being told to you that if you just simply look at like ICT or nothing, you're missing out on so much of the picture. Okay, so I highly recommend to start studying like the candlesticks themselves, right? Like these types of candlesticks. These are massive bullish engulfing candlesticks given what's happening with price action. These wicks are showing you buying and selling pressure, right? So if you're seeing wicks on the bottom here inside of the base of the IFVG, it's showing you that buyers are still holding this level up. And even though you have sell-offs happening here, that's fine. Look at all this. This is strength. Look at this candlestick. This 3 candlestick pattern right here, that's a reversal pattern, right? Selling pressure, buying pressure, and then bullish engulfing, right? So you can look at this as like accumulation, manipulation, distribution, right? PO3, as ICT often talks about. It doesn't just have to work with a series of ranges. It can work with specific candles too when you look at these concepts. So price hits this level. Now, when do you move your stop loss to break even, or when do you start taking TP? In my opinion, the second price starts to tap into this SIBI, that's when you got to start taking some TP, move your stop loss to break even. If you are waiting for more, like meaning you just want to take 1R, then at the minimum, I would be moving my stop loss to break even. Okay, so if my entry was like right here, I move my stop loss to break even. Once price taps into this area, then you start seeing price action move a little bit higher. Now you got to start making the decision. Do you keep your stop loss at break even and not take TP? Do you skim some profits, move your stop loss to break even? Or do you just close the whole position and be thankful that you got near 1R and just call it a date? Because it is pre-market. Anything can happen. Okay, so there's a few scenarios you have to ask yourself. If it was me personally, and I started seeing price action move aggressively like this, and then I saw this candlestick starting to form, I think I probably would have just exited. And I would have been happy with whatever is being given, right? Like 0.6 to 0.7. Even if price had kind of swept a little higher here, I probably would have just closed my position, to be honest with you. And the other thing I'll tell you is like when you're trying to identify where to place your stop loss, observe where the nearest draws on liquidity are. So something like this or this, right? So let's just take this for example, right? So I'll just put my TP here. Now it's showing 0.83. This is where I would then want to do something like this and start moving my stop loss higher, like this. So now I can look at this and go, okay, well, you know what? My stop loss is still in a great area. It's below Asia low. It's below the IFVG. If price starts to close below there, this trade is pretty much cooked anyways because it shouldn't be going below there. If anything, it should be respecting this and pushing higher with momentum. So by doing this now, I can start to take my TP at more obvious levels, more defined levels. So if my TP for 1R is here and I see price literally sweep in just like this, you don't have to wait, right? I mean, we set like limit orders and things like that to take TP, but like this just missed it, right? And I often say this in other live streams, I don't like to be last to take TP. I like to take my TP before other people take TP. I like to front run things. And I'm okay with not being perfect in, taking the full TP of the entire move. Like I'm okay with that, right? Because my goal isn't to be perfect. My goal is to be near perfect. My goal is to be as perfect as possible in executing my plan from start to finish. What the market is going to give you is not in your control. How you react to what the market gives you is in your control. So if you have control over your greed, if you have control over your, all the noise that we hear in our head telling us to don't take TP yet, I think it's going to go more, or like the stubbornness and the ego that we have that you're looking for home run hits, that could get you into some danger. So for me personally, I probably would have just taken the TP early here. It's close enough. I would have been happy with it. That's how I would have played it. However, on the other side about this is if you didn't take it, you definitely at the minimum have to move your stop loss to break even because you don't know what's going to happen. And even in something like this where it's kind of like a bad stop loss, or sorry, a bad break even, because literally 924 price comes all the way back to break even, and then the next minute, literally the next 1 minute candlestick goes straight to TP. There's no telling what this market is ever going to do. This could have easily gone the other way. This could have easily have been a candlestick taking you straight out stop loss in less than 1 minute. I've seen this happen, okay? So in hindsight, we can look at this and go, oh, that's a bad beat, and I should have just, I gotta stay true to my setup and I'll just hold. But hindsight's 2020. The next time something like this happens, you don't have a candlestick going in your favor, you have a candlestick taking you out. And this is why you have to always be consistent in the strategy that you're deploying and how you're implementing that strategy with what price is giving you. Okay, so a little bit of a strategy there in terms of the first IFVG setup that happened today. Let's clear the charts. Let's shift gears quickly to, I guess, the longs a lot of people were taking today. I noticed Ash took a long on ES. Let's take a look at that. So what does that look like? So if I just remove everything off the charts, let's go to the 4 hour for a sec. I just want to see what we're dealing with. So volume imbalance here on ES. Check where the actual hour was. So here's 8, here's 9. Okay, so it's probably some sort of SMT maybe. I would think maybe there's some SMT there. Or maybe not. Okay, let's go back to the 15-minute. So what I had noticed when I was looking at this, trying to understand the long position that was taken, Asia low is swept. You do have that FVG here, and I think price then goes into the NWOG at open right there. Okay, so price dips into the NWOG right here. This is kind of supporting a bullish setup, no doubt. Okay, so NWOG, put that back in. We got the Asia low sweep. I'm just going to mark that one more time just so we do it fresh. Okay, so Asia low swept. Let's not look at the daily EQ because I know with Matt and a lot of other CISD traders, they're not exactly looking at that, right? So here's NQ, and if we just back this up just a bit right about here, okay, this is what it looks like. So loads of chop to start the session, then you have a sweep, re-sweeping Asia low, which has already been swept, but you could just say it's re-sweeping it into an NWOG, okay? So that's not bad. Where's the CISD? Right here. Now, keep in mind, once again, this is NQ. I know the trade was set up on ES, but I just want to, we're going to compare notes here. So here's your liquidity sweep to confirm the CISD placement. Previous daily highs up here, it's already been swept, that's fine. What happens next? You can set up your standard deviation tool here. So you're just anchoring the low to the actual candle closure. And I'm just going to put standard deviation expansion here. So ideally then, you're looking at, -1 here. Wait, that's the wrong one. This one, there we go. So you got -1 here to 0. This is consolidation, -1 to -2, 2.5. This is where you have expansion. This is where you have the TP zone, right? And then anything beyond that is overextension. What happens next? So you don't get a closure here, meaning you can't enter that setup until you get a closure up here of the CISD. That's fine. Then you get another rejection, and then you finally get a closure. Okay, does this tag back to the CISD? Let's find out. Stop loss probably at the low. Here's 1R right here. Imran says, what is the best, sorry, I just saw your comment here. What is the best scenario to put stop loss at protected low so that we can close the trade if candles are getting closer below the IFVG? Yeah, once again, man, I know I kind of switched gears here, but I would have just said, like, you have 3 ideas to place it. You can place it directly below the IFVG. You can place it at a more defined swing point that doesn't have to be the swing low itself, like I had shown there. Or what you can do is place it literally at the swing low, and that's your hard stop loss. So if you start seeing acceptance below the IFVG on those 1 minute candlesticks, you can just exit manually and limit your loss. So to me, I also look at points, right? And I showed you that if I had taken stop loss and placed it just below the IFVG, it was like 14 points. If I placed it at another swing point that was defined, it was 20 points. If I placed it at the actual swing low, it was 25 points. I would have just used 25 points. But then you have to measure the nearest drawn liquidity, like I showed you with those SIBIs. So what that would have done was I would have measured where the TP is at that drawn liquidity and then move my stop loss up to kind of equal 1R, right? Otherwise it would have been like 0.8R. But by doing that, I can then risk a little bit more money and take my TP at a more clear position. So I hope that makes some sense. Unicorn Barbie in the house, what's up? Maximum 25 points below IFVG. Yeah, I mean, I don't go specifically by points, like a hard rule. The only hard rule I have with IFVGs is the IFVG size itself with NQ. Like I want that IFVG to be 5 points minimum. And it all does depend on the size of the candlesticks too, right? Like if you had like a 40-point IFVG, right? But the candlesticks are like 50 to 60 points each, then that kind of makes sense, right? Because that's a lot of volatility, a lot of volume in the market. So, okay, so back to the CISD. Here's the confirmation, and then here's your entry right there, okay? So you're looking at a setup something like this. Is there SMT? I'm not 100% sure. It's showing there's SMT here. If I go back to ES, because you have a low here at 935 and then a lower low at 947. Here's 935 and then here's 937. So it's about the same, but it's showing it right here. So I wonder if another low got made. Oh yeah, it did right there. Okay, so 941 to 947, there is bullish SMT. Actually, NQ is the stronger pair, believe it or not. But let's take a look at how this plays out. And let me just get rid of this for a sec. So you can see nasty price action, very nasty price action, and then ultimately stop loss, okay, based off this. That's the NQ side. Let's look at ES now. So ES, let's go to the 15 for a sec. ES is tapping into the previous daily low. Let's see if there is some sort of FVG on the 4-hour. Yeah, okay, so you have a 4-hour FVG being respected. Let's just mark that out. 4-hour FVG. 15-minute sweep of previous daily low. Go to the 1 minute. And the 1 minute is showing us this right here. So this is the ES setup that happened. So there's your sweep, right? And once you have the sweep, we can then identify where the CISD is. I'd probably place it right there. Okay, so there's your CISD. Where's your entry? You got to close right here at 947. The next candlestick tags you into the trade. Stop loss at the low. Measure out your standard deviations. There's -1, there's -2. If you're someone that's taking 1R, right, like this, you already won the trade. Literally in the same candlestick that it got entered in. And even if it didn't trigger you there, the next candlestick takes you to TP anyways, okay? So that's if you're taking 1R trades. I love 1R trades. I don't like waiting for 2R. I'll just take 1R. Now you can see the drawn liquidity. There's a nice drawn liquidity right up here. You got some LR up here, which is great. There is a bearish FVG here, but the more, I guess the more clear drawn liquidity is way up here, right? But look at what happens. Stop loss. So if you're waiting for 2R, you missed it. If you look at what was happening though, you have a rejection of the -1 standard deviation. And I had mentioned this actually on Twitter, that sometimes like you gotta know when to take TP early, and it's not easy to know when to do it, because like looking at this, you're thinking like this looks like such an obvious target for TP, right? Whoops, put the wrong thing there. Right here. this looks pretty obvious. But in order for price to get up there, it has to start to flip all of this. All of this resistance has to start getting flipped. So if I just mark this off as like a SR zone, just make this, just shift the color, make it green for a sec. So like, you see how it's rejecting, it looks like it's gonna flip. Like this has to hold support, because if it starts to lose support, what happens is it flips the support into resistance. When you're trading ICT, we often forget the basics of trading. We forget the basics of what candlesticks represent, like I said earlier. We forget what the basics of supply and demand or support and resistance look like. You have a clear resistance zone here. Why is it a resistance zone? And I know some traders will say, I don't use that. I think that's silly, because the foundation and the fundamentals of trading are in support and resistance, right? Forget the trend lines, right? Because trend lines are very subjective and they can keep changing. But when you have a clear horizontal line and then you look to the past, which is just recent, and you can see the selling pressure of the wicks, right? We got to know the candlesticks. This is clear selling pressure. So in order for this to go higher, we have to flip this level. If we look to the left, way to the left, okay, we can start to see even previous price action. Look at the level. It's still coming into play. Look at this. Okay? This is a real thing. Support and resistance is a real thing. If you don't know about it, you don't understand it, you need to go back, take a step back and learn this. It is so valuable to know, because when price action starts to move, and I love that we execute using ICT concepts, but you have to start to also use the core foundations of support and resistance of trading, right? Candlesticks, like what they represent. That tells you a little bit more of the story as price starts to deliver, okay? So maybe I'll have to do another masterclass or something on supply and demand, or sorry, support and resistance. But literally, I just looked to the left here and I saw selling pressure. That's how I define support and resistance on this setup right now, okay? I haven't even looked at this. So I'm just saying, I see this, I see my setup obviously with ICT concepts, right? Liquidity sweep inside of a H4 FVG, sweeping previous daily low. I have H4 50-minute and 1-minute time frame alignments. I see the CISD entry. If I don't take TP at 1R, I have to start to at least move my stop loss to break even, in my opinion, especially when I start seeing this. So you see how these wicks here show us selling pressure. We look like we're going to flip it. We look like we're going to hold strong here at 951, but then this candlestick rejects this level. So it's ultimately flipping this from support into resistance now. And why is it flipping into resistance? Because the next three candlesticks show you that. You have an underside retest and then a massive bearish engulfing rejection. This trade's cooked, just looking at it from a support resistance thing. So for me, even when price, like let's say you didn't move your stop loss to break even here, and then you have all this happen, if you start to see this come back up here, you have to move your stop loss to break even, in my opinion, because if price rejects here, this trade's cooked. And sure enough, it did reject here, and this trade's cooked. So really, really interesting to see how the basics of trading, support and resistance, the basics of candlestick foundations are showing how important it is for you as a trader to know. So Imran, we'll talk about SR maybe another day. I'll just spend maybe a day just specifically talking about that. We can look at that because there are little tricks you can use. I'm going to show you guys some stuff maybe down the road that I also use. Unicorn Barbie says, for me, I chose to partial around 60% of my position at 1R and leave the rest in case price wants to keep going. I set break even and I'm so at peace with myself. You know what? Well done. And you know, the thing is, it's not easy to do that, right? Because greed and ego and pride, you know, we're human beings. We're experiencing all of that stuff all the time in anything in life. And especially when it comes to trading, because we're alone looking at you know, candlesticks print on a 1-minute time frame. Like, we're gonna have voices in our head telling us that, like, this looks so clean, right? Like, if I go back here and I show it to you like this, like, let's just get rid of this for a sec, And let's just go back to the actual entry, right? This is what you're looking at. This is what you're looking at. This looks so obvious, right? This looks so obvious. Like this definitely should go over. Look, it even closed above this SIBI. This candlestick closed above this SIBI. And then the next candlestick, which is an indecision candlestick, potentially showing you reversal could form, because when you have wicks on both sides and then a body that's like really, really tight, it's telling you indecision. That usually is what starts to form when you have exhaustion of a momentum, right? If you have two massive candlesticks forming like this, and then the next candlestick isn't another bullish engulfing candlestick or some sort of bullish candlestick period, that's telling you that momentum has literally hit a hammer and is getting nailed, okay? But well done, because when you see the nearest draws on liquidity, like I said, there's a couple ways to play it. You either skim profits, move your stop loss to break even. You either move your stop loss to break even, or you are basically doing nothing and you're just waiting for full TP. So it's like a ride or die type thing. So you as a trader have to decide what's best for you. Me personally, I side with Unicorn Barbie. Like, I hate seeing price move to clear levels and then I'm trying to expect more out of it. We already tapped 1R here. We already tapped the nearest drawn liquidity, which was the SIBI, which was all of this LRLR right here, right? All this is LRLR. This is all what we look for when we set up a trade. We're looking for liquidity. But is this not enough? You want this. See where I'm going with this? Like, the market's never going to just do what you think it's going to do. You have to like base your decisions off of what the market is showing you, right? And if the market's showing me that the nearest drawn liquidity is this SIBI and is this LRLR here, and my entry's nicely placed right here, you have to be either taking profit, moving your stop loss to break even, you have to be closing the trade fully, or just move your stop loss to break even at the minimum. Because you don't know how price is going to react here, and it can just reverse, okay? Imran says, it doesn't look like that you are adding extra confidence into your strategy, support and resistance. Sometimes if we're adding extra confidence, that doesn't make it worth it. It's just a headache. I'm sorry, I might be wrong. I will be honest with you guys, and I'll tell you that I don't share everything I do, because it's just like you said, I don't want to make life confusing for a lot of people. If you are kind of looking at my charts and understanding things, I do use support and resistance, right? You can clearly see my understanding of it is very, very, I feel like I'm very knowledgeable about it. I use it all the time. I use it a little bit differently than other people, though, and I'll have to explain it down the road with things that I look for. But like I said, I still do look at it. I think it's a mistake to not observe it, right? It's like SMT. I observe SMT, but it's not like make or break for me on whether the trade's going to work. I look for higher time frame FVGs if they exist, but it's not make or break if they're there or not for my trade. That's how I use support and resistance. It's not make or break for me, but I observe it because it can tell me a little bit more to the story on the trade and what I'm up against or what I have going for me in the trade. So I hope that makes some sense to you. So he says, I used to keep listening and trading that keep your strategy simple. Yeah, man, I totally agree with you. I totally agree with you. The more you start adding, of course, the more complicated things are going to be, right? So this is why you kind of have to start. This is why on my charts, I don't really share everything that's going on with other types of concepts and things I'm adding. If you look at my charts, I'm going to show you something. This is the tell, okay? I'll show you the tell. If you look at my chart right here, okay, you have buy side liquidity, you have sell side liquidity, right? We have ICT levels that we use, overnight session highs and lows, previous day high, previous day low, daily EQ, right? But there's other lines I have on my chart that nobody even knows about. You see these levels right here? See these levels in purple? See these levels in green? These are other levels that I use, okay, that help me with support and resistance. And I define them like the way they're derived. They come from a completely different set of concepts, okay? I won't fully engage into it right now. That I'll save for another day. But what I will tell you as a tip is I'm using pivot points. Okay, I've started to kind of show it a little bit in my charts, but maybe you don't even know it's there. Let me see if I can find a chart. So let's go right here. I shared this chart at 9:53 NQ back at the daily EQ underside, and ES is still chopping away near the previous daily low. Let's look at my EQ chart, or sorry, my NQ chart. Okay, what do you see? ICT concepts, previous daily high, daily EQ, ICT concepts. There's those purple levels, that range I was talking about, which I had formed. But guess what else is there? Look at this, R1. These are pivot points that I've got marked that I'm using. Now, I'm not trying to introduce this to you, but I'm just trying to tell you that I do use other pieces of confluence to help me with my trades, to help me understand where very key higher time frame levels could be located. Okay, the thing is, and I said this many times in many live streams in the past, if you are putting indicators on your chart, they have to be supporting your process to make your life more efficient. They shouldn't just be on the chart because they look fucking cool. They shouldn't be on your chart because that's what you think all trading, these things need to be on your chart. They have to be on your chart to serve a purpose. If they don't serve a purpose, take it off your screen. So even for me, like I'm adding pivot points to my chart, and I'm adding other types of support and resistance ranges to my chart. They're there for a reason. They're there to help me make my process more efficient. It's helping me to understand the potential of where price could go. And then if I align that with higher time frame liquidity, such as an hourly buy side liquidity, or H4 sell side liquidity, or an NWOG, this is actually going to just help improve my process. Okay. DH says, do you have a minimum size for IFVGs you'd look to take entries from? So IFVGs you use instead of liquidity sweeps, not the one we then close through, or do you just eyeball them and feel what's large enough? So with NQ, when it comes to the IFVG, like it has to be a minimum 5 points for me. So there is a minimum, okay? Maximum is like, 30 to 40 points, but like I said, it depends on the volatility and the size of the 1 minute candlesticks in session, right? Because if you have a super volatile session where 1 minute candlesticks are printing 100 points, you don't want to be trading a 5 minute, you don't want to be trading a 5 point FVG, right? Like that's going to get ripped up into shreds. And then, okay, so you clarified. Sorry, I meant the higher time frame gaps, such as the NWOG tapped off today. No, not at all. Because the thing is, like, I'm not using, like trading off of an NWOG today. We're going to go into that in a sec. I know I've been ranting a lot, but about all this strategy-based stuff, which is fine. I'll have to explain my thought process today because I don't really use the NWOG as a POI, but I'll explain myself and maybe it'll make sense. I think you have to be able to adapt if you feel comfortable. If the liquidity sweep is mandatory, then there was no liquidity sweep today on the higher time frame. You would have just not taken the trade. But for me, I opted to take the risk because of what I was seeing, and I'll explain that in just a sec, so it'll make sense. But I don't care about the size of the gap. I just care if there is a gap or not, right? So I identified, hey, there is an NWOG. Does the EQ of the NWOG, I would probably say the EQ of the NWOG or the EQ of a range, FEG, NDOG, whatever the EQ is of that, even if it's an IFVG, the EQ of that range, that to me is the level that's really important. Because if you look at the range from the concept of premium and discount, and the EQ is your line in the sand, and you're bullish, you want price to stay above the EQ, right? And if you're bearish, you clearly want that EQ to be disrespected, and then ultimately you want the range to be disrespected and flipped into resistance. And then you'd want the underside of that resistance and the EQ of that range to be respected, right? Much like I showed you with that ES setup, right here. If I go back to this, I go right here. Right, so here is your 1 minute SIBI, price is reacting off of it. Look at the EQ, right? Look at where price is reacting off of here. Even though it didn't tag this right here, but look at where it's reacting, right? Look at this. Look at where it's reacting, right? So I look at more of the EQ than anything else. So I hope that makes some sense. Tracy says, I keep my pivot points on my charts too. It was hard to take them off. They're like magnets. Yeah, you know, I'm not sure. Do you use traditional? Do you use Camarilla? Which one do you use? What setting do you use? I have mine set to traditional. But I'll show you guys some tricks with it down the road. Not today. Okay, let's exit off of that setup. So that's some conversation about that long that played out today and failed. So right off the bat, like I said, it was a very interesting morning because we had we had the Asia low sweep, then we had the open, we had all the crazy chop. Okay, let's open up the daily EQ again. Let's go back to some of these concepts, right, that I use. Daily EQ, and just more of the fundamental IFVG, ICT concept-based things, okay? Just get a sip of water, too. Okay, so at open, we get a massive move tagging the daily EQ. Now, you'll notice that there is a potential setup here, okay? You have this right here. I'm just going to mark this off, okay? So you have this level right here. Now, I was looking at this thing, and I was like, do I take this IFVG or not? Like, should I take this? We got SMT here. We're literally respecting the daily EQ. Is there a 15-minute FVG at play or an hourly FVG? 4 hour? I don't know. Is there any sort of FVG? 5-minute? Yeah, it looks like there's a 5-minute SIBI here. Price moved into. We can mark this off quickly. And the only reason I'm marking this is I'm just trying to look to see if there's confluences, right? Like, what other reasons are there for price to have rejected from where it rejects from, right? So daily EQ is one reason. 5-minute FVG is another reason. Okay. So there's reasons to support why price should go lower from there, right? That's what we're trying to do. We're trying to stack these concepts. Now, price aggressively closes below the IFVG. Beautiful reaction, right? Remember I talked about that? Strong reaction, good momentum, confirming the IFVG. Perfect. That's good. We have that. But you have to turn your brain on a little bit to start thinking about things logically, okay? Because mechanically speaking, you would just look at this if you're backtesting and go, oh, yeah, daily EQ sweep, inside a higher time frame FVG, bearish SMT, IFVG, blah, 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 enter right here. But you're missing out on this massive piece of context. What am I talking about? Let me show you. So the big reason I didn't take the DEQ underside short setup was because price action had already moved 60 points away from the DEQ itself, okay? What does that mean? If this is the DEQ, look at where the price action confirmed, okay? Let me just close this right here, okay? Look at where the IFVG actually confirms, okay? Let me measure this out. So I don't think it's exactly 60. I think it's 60 to the top here. Yep, so it's about 47 to the DEQ, but price has moved 60 points the other way. That's a lot, okay? So number one, that was a flag. What's number two? The major LRLR that I wanted to take the TP at is literally located where the entry is, okay? Right here is where the entry is. But look at where all the LRLR is. It's already tapping into this. When you look at DEQ setups and you look at where your draw liquidity is, like, I don't want to enter here. I want to enter up here. So if you enter up here, you take your TP in here. But you don't want to be entering where you take your TP. This is where you have to turn your brain on to think about things logically, because emotionally, we're just like, oh, bang, 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 bang. Everything checks off. I'm in. And the next thing you know, the next candlestick is a stop loss, right? Because like if you have your short entry right here, and let's say you're using this level here as your stop loss, the next candlestick, it's over. And why is it over? The next candlestick actually sweeps deeper into the LRLR. This is your TP zone, not your entry zone, okay? So big reason why I stayed out was for those two reasons. There's another reason too. I had mentioned, I said ES was also quite close to an H1 sell side liquidity level, and then the previous daily low was actually just below it. So if I just show you this image, this is ES at that same time. Look at where the H1 sell side liquidity level is. Look at all the liquidity prices already sweeping. Is this favorable or unfavorable? It's unfavorable. The whole point of taking a trade in the first place is to put yourself in the highest probability, not the lowest probability, right? Even if something is 50-50, brother, 50-50 is gambling. You don't want to put yourself in a 50-50 situation. You want to put yourself in a more favorable position, even if it's like 60-40 or 55-45. At least you have situation, or the situation is more favorable in your advantage than not. If it's 50-50 or less favorable, 40-60, 30-70, you should just be avoiding it no matter what. The price action is trying to lure you and tempt you into taking positions based off your feelings and your emotions. This is what they do. Okay? Imran says, 1, if price is getting rejected from the daily EQ, it isn't a good short setup. Please explain. I didn't get that. So once again, it's not just about the level. You have to think about where your drawn liquidity is. You have to think about where price is located when it confirms the IFVG in relationship to where the drawn liquidity is, like I just said, right? If I'm entering here and this is my drawn liquidity, this next candlestick has already swept my drawn liquidity. What do we normally do when we enter a position and price starts to tap the nearest drawn liquidity? We talked about this with ES. You have one of a few options. You skim profits, move your stop loss to break even, you close your position fully, or you're ride and dying and you're letting it go either way because you're looking for more. Guess what? You don't even have a chance to set yourself to break even because this happens so fast. So you're screwed. Number 2, if you're ride or dying, well, you just died. And number 3, you don't even have a chance to skim profits because it happens so fast and move your stop loss to break even. So I hope that makes some sense. Okay? And even if I were to like move my stop loss like above the DEQ and give myself almost a 50-point stop loss here, let's just move this down to 1R for a sec. Let's do this. What happens? This trade, even if you use a much larger stop loss, and let's say this was a major draw liquidity, obviously, right? Because we can see all the LRLR here, right? Price hits this level. The minute this hits, even if you didn't catch a stop loss, maybe you're still in the trade, even though price is closing back above the FVG. You have respect still to that liquidity sweep level, right? Which is fair. Maybe that's another line in the sand. So you're still in the trade. But guess what? The second price hits that drawn liquidity, your stop loss has to come to break even. Because you don't know if it's going to reverse from there. That's a major draw liquidity right here that you hit. So right here, you would have been tagged out of the trade break even if you didn't hit the stop loss like I just said. So when I started looking at this whole thing, it just didn't seem favorable to me, right? And like I said, ES was very close to the hourly sell side liquidity. Doesn't make sense, okay? And then if you want to kind of go back just to review what I'm talking about, go back to this post because I showed the exact scenarios I just talked about, right? I talked about the LRLR, I talked about stop loss placement. It's all here. Go back and check it out. It makes so much sense, okay? Now, the next thing I want to talk about is right here, question you may have. Why not take a long off the NWAC, okay? And the answer is there's no clear high time frame liquidity sweep, okay? Now, this is happening before I see a position form, okay? So in my rule set, this is what I'm thinking. I need to just be very patient and very clear on what I'm doing. And then I said, so far the most clean setup was the pre-market Asia low sweep with the IFVG long setup, and I said even that was a choppy ride. Then literally moments later, I'm still looking at my chart and I'm going over the time frames, and I notice on the 3-minute we get this, okay? Now, why did I get interested on this 3-minute? I'm gonna actually throw this to you if you're still able to follow me here and you want to engage. But like, why would this 3-minute be interesting to you? And then I'll tell you why it was interesting for me. I still didn't take this setup though, but I just wanted to ask you guys what you think. I'm just curious. Did anyone find this interesting? Did anyone even see it? I don't even know. Non-singular, clear drawn liquidity and sweep. So I would say this is singular because you have one single FVG that gets flipped into an IFVG, and then if you look to the left, there's no additional FVGs on the 3 minute. So I would say it is singular. Is there clear draw liquidity and sweep? 100%. It literally swept into the NWOG. Look at the EQ of the NWOG. Remember I said this earlier. Whenever you have a range, look at the EQ of those ranges. It tells you a story. Also, pivot point. There's a pivot point right here. Now, when it comes to a pivot point isn't like an ERL where it has to be swept. What it is just kind of showing you a goalpost, right? So when you have a goalpost, if price kind of can trade close to it, that's good enough, especially when you have a clearly defined liquidity area such as an NWOG and the EQ is being respected. Okay, I'm interested in this, but I still didn't take it because I thought, you know what, I'm not going to take it. There's no liquidity sweep. And there's another reason I didn't take it too, okay? And this is where Imran's right when he says non-singular, but he didn't say why non-singular. There is a non-singular part to this, and it's because it's on the 2 minute. So let me just close all this off. Just back this up. And let me go back to right here. Okay, so on the 1 minute, to me, agreed. This is non-singular, right? You have your IFVG right here, but the problem with this IFVG, and I'll just answer this, I won't ask this to you guys, 1.75 points. I don't like the size of that. There is an IFVG up here, but I don't want to be taking this on the 1 minute time frame because I don't like how it looks. It's not clean to me, right? So when things are not clean on the lower time frames, I like to move up one time frame. So I'll move up to the 2 minute. I'll move up to the 3 minute. Now, I already told you the 3 minute had a super, super nice looking IFVG right here, okay? It was sized appropriately, above 5 points. And given that we have smaller candlesticks today, 8.25 is perfect for me, okay? So you have that. We know we're already inside of the NWOG and it's being respected, so let me just quickly reapply that to the chart. Now, I'll also say something else about the NWOG. I find a lot of people draw levels very differently from one another. And what do I mean by that? So some people, when they draw NWOGs, they're looking at this wick, and they might draw it like this. They might go wick to wick on their NWOG, right? But the thing with an NWOG is based off of the open and the close of two specific candlesticks. The candlestick on the Friday at 4 to 5, and then the candlestick that opens on Sunday from 6 to 7, okay? The wick itself can only create a volume imbalance. So some people I've seen, they've done this. The way I've studied and learned about it, and I mean, maybe I'm right, maybe I'm wrong, I don't know. This is just what I do. I actually prefer to use the candle bodies themselves. So I'll measure the range based off the open and the closing price. That to me is the true NWOG. Okay? So when I look at it like that, and you know what I'll do is I'll just mark off if we were to use, let me just do this for a sec. I'll do that. So this is using the wicks, and then the massive gray shaded area is, or the solidly shaded gray area is our body closures forming the NWOG. So let's go back to the 1 minute, okay? Let's just take a look at this. Okay, so when we look at it from this perspective, okay, this dotted line here, this range, this lighter range, that's, once again, that's the wicks. But the wicks don't really tell you, like that calculation, it doesn't really tell you much, right? Compared to if you were to use the body closures. So let's close this up. What do I mean by that? Well, look at the respect that you're getting off the EQ of the NWOG using the body closures. Look at the respect you're getting at the NWOG upper part of the range compared to if you were just using this, right? Let's take this off for a sec. Yes, you got candlesticks tapping into here. Yeah, you got some closures here, but like it's not really. What about all this stuff, right? You see what I'm saying? All of this isn't like there's information on the chart that's not being accounted for, and it's actually telling you something. So let's go back to this. Now it's telling you something. Look. So attention to detail, I find in these specific ways, can really help improve your trading decision making in real time. Okay, it's a very small little thing, but I really hope you take it to heart, try it for yourself, go back through other charts and see for yourself. That's all I can tell you to do. Okay. Okay. So let's go back to the 1 minute. So 1 minute, didn't like it, not very clear, right? 2 minute and 3 minute are now the next two time frames that I'll take in question. I don't touch 5 minute FVGs or higher. I only deal with 1 to 3 minute FVGs. So 3 minute, beautiful, right? Beautiful, 1, 2, 3, 4 candlesticks, beautiful reaction off the NWOG, and then we also know we have that pivot point that was there, right? Really nice closure. I still didn't enter this trade. Why? Because if I go to the hourly, there really isn't a liquidity sweep, like a higher time frame liquidity sweep. There's like we already had Asia low that was swept, but to me, I don't reuse higher time frame levels that are swept. So if there was another level here, then this would have been a really super easy trade for me to enter on the 3 minute. So I decided to stay out of that, okay? If you go back to my thread or my channel, I said I'm just watching this 3 minute FVG. So I still called it out, right? I still called it out literally right where entry was. It's up to you if you want to take these trades or not. I'm not a signal service, but I like to still share what I see, okay? I mentioned how, now you have chop here. I did mention, hey, I'm starting to see a discrepancy between NQ and ES, all right? NQ is slowly grinding higher. It is choppy, meaning it's ranging, but if you look at ES is just like grinding lower. What does this tell you? This tells you that you're starting to see discrepancy or divergence, right? Bullish divergence. Okay, that's what that's telling you. That supports the ideas that longs could work from this NWOG. We know NWOGs are very, very powerful, right? But I'm looking for more. Okay, I was looking for more. Then, what I noticed was the 3 minute is literally now starting to fly. Look at the strength of this. Look at the reaction to the EQ of the IFVG. Look at the reaction to the top band of the EQ, of the IFVG, okay? Attention to detail is very, very important. Candlestick closures are very important. They tell you a story. They tell you what's happening with the momentum, okay? So seeing how price is starting to now flip that IFVG into support, right, is telling me that this NWOG is holding up pretty damn good, okay? And then on top of it all, we know that there was SMT that started to form a little bit more beyond as price started to develop, I believe. Is it here? Or maybe it didn't form there. Maybe I'm mistaken. I apologize. Maybe it's the other setup that I'm thinking about. Okay, so 3 minutes almost at 1R. Now I'm thinking, well, okay, I clearly missed the 3 minute. Okay, clearly missed the 3 minute, which is fine, not gonna enter it. What does the other time frames look like? So here's the 1 minute time frame. We know we have this FVG here, okay? Sure, there's that FVG here, cool, okay? And the DEQ up here, that's our drawn liquidity, we know that. We have LR all up here. We can clearly see reasons why price could go higher off the NWOG, okay? Even though ES is hovering around a previous daily low and grinding lower. But if the previous daily low can get flipped into support like this, then that would also support the potential that you have a sweep here inside of a higher time frame bearish FVG or bullish FVG, right? That H4. Is there a 50-minute level sweep? Okay, so there isn't a 50-minute level sweep, but you do have 50-minute FVG here. You do have that 4-hour FVG, and then you have that previous daily low level. So you do have those levels working for you with ES to support that. If ES can just show some strength here and flip these key levels from resistance back into support, that will support the idea that NQ going long might work. Okay, so let's go back to NQ for a sec. So here's the 1 minute. I didn't like this, and the reason I didn't like this is because the way it looks on the 1 minute is just very messy to me. It's also, per the 1 minute, the way the candlesticks are formed, I just didn't like how it's situated kind of in the middle of the range, right? Now, granted, if I go to the 2 minute, it's still in the middle of the range, right? But if you look at the difference between the 1 minute and the 2 minute, the 1 minute isn't, like, there is a small little FVG here, but I would not say that you can stack those two, because you have like an order block type candlestick right here, right? It's not just like two clean FVGs that you can stack. So if I go to the 2 minute, you'll see what I mean. See how this is one right here and one right here? I can stack this. Okay, so now my IFVG isn't up here. It's actually this entire range. So that was giving me more confidence that maybe the 2 minute might work. Okay, so I was watching the 2 minute, and then I also said that right here. 2 minutes set up and play, right here. And I didn't even alert it at first because I wasn't sure. I was not sure with what I was seeing. I'm using like another type of SR level here. You can see the respect to it, this range here. See this 30, 226, 30, 212. This is a support and resistance range I use off of pivot levels. I'll have to explain this down the road because it's a little bit complicated. But I was watching how price was reacting to that range, as well as, of course, the IFVG. Seeing how price was reacting here and rejecting this, see this bearish engulfing candlestick? This right here, I still stayed out. I was like, nope, not touching it. But then I saw this candlestick. What did this create here? Okay. Once again, people shit on retail concepts, but I tell you, if you can combine just some basic key retail concepts to your IFVG setups, your ICT setups, whether it's IFVG, Unicorn, CST, whatever the hell it is, if you just kind of combine it, it can be so valuable, okay? This closure right here of these two candlesticks is something known as a tweezer bottom, okay? A tweezer bottom is when you have two candlesticks, one going down, in this case, and one going up, right? Bearish and bullish, but the wicks are at the same, basically the same level. And the body closures are basically nearly the same, like the closure here and the open, and it never goes and closes down here. This is a tweezer bottom. Look that up, okay? Tweezer bottom. And what you'll start noticing, to me, like for me, I was like, okay, that looks really good. I really like that way that looks. Here's the other thing. Let me go back to the NQ chart for a sec. Let me go back to, where is it? Let me go forward here. Right there. Okay. This is what it looks like. Now, earlier I talked to you guys about support and resistance, right? And I said to you, when it comes to support and resistance, you have to look at the past to see how price responds. What does that mean? You're looking for wicks. If I literally just look to the left, there's wicks like here. If I stretch this out like that, what does that look like to you? Let's just stretch it out like this, and I'll actually, you know what I'll do is I'll make it look, I'll probably stretch it like, maybe like this, right? Because it's kind of the top of that. I mean, we could even just use these wicks just like this, okay? Perfect, just like that, okay? What does this look like to you? You have resistance here, right? Resistance, resistance, flips it into support. Look at this, the buying pressure, right? And then you have resistance again, and then it flips it again. And then you get the tweezer bottom, which is a bullish reversal pattern, forming off of the key SR level that got flipped. The second I saw this happen here, and then you start combining it with the ICT concepts that we know, I mean, I already saw the 3 minute work. The 3 minute already hit TP right here, right? The daily EQs right here, LR is up here. There's a lot for price to reach for. What's ES doing, right? ES is still grinding lower. It never flipped that level, which is fine, okay? Which is fine. But what it's still doing is it's showing you bullish divergence. NQ is pushing higher, ES is pushing lower. You have bullish divergence there, right? Lower lows are being formed here. NQ is making higher lows. This could push a little higher, okay? So this is why when I saw this candlestick, I got interested on all those reasons. This is why I say it's so important to understand some key retail concepts because it can help you with reading how price action looks and the story it's telling you. Because if you just look at ICT concepts alone, it's basically going to be very tricky because it's misleading you at times. The price action is going to trick you into telling you things that don't actually that aren't actually happening properly. Okay. So let's go back to what's happening here. Sorry, just give me one quick sec, please. Ezra, I need you to upstairs. I'm in a live stream right now, and there's a lot of people here, and I can't have them hear everything. Okay, thank you. Sorry about that. So, seeing what I'm seeing here, and I'm combining all of these things together in real time, it's helping me to stack confluences. That's all this whole thing is. And when you stack confluences, you're creating higher probability situations or scenarios for yourself to trade with. That's all trading ever is, in my opinion. And that's something I learned, when I started following Matt, was just the idea of like stacking confluences. Okay. Now there's things that can be done mechanically, but then there's things that can't be done mechanically. Like what I'm talking to you right now about identifying support and resistance levels, it can be very subjective, right? What I see might not be what you see, right? But this is why you have to kind of base a lot of this type of learning through experience, through intuition, and then watch how price responds. That's the only way you're ever going to understand, right? Is defining these levels in real time and then seeing how they respond. And then, like I said, being able to kind of see specific types of reversal candlestick patterns. I'm a reversal trader. I only care about what reversal patterns I see, right? IFVG is my entry trigger, but everything that happens leading up to the IFVG confirming itself is me understanding the reversal schematics themselves, right? And a lot of things can bleed into each other, right? Like whether you have 3 candlestick or 4 candlestick closures, what momentum looks like, what strong reactions look like, and then you start tying in retail patterns, tweezer bottoms happening at SR levels, right on top of an IFVG EQ, right? Like things like that. You can literally put these things together. So anyways, I got interested in the trade. Here's my executions, okay? So my first execution came literally, I entered here first, not up here. My entry was literally here. I thought I would give this a chance. And then when I started to see this candlestick form, and then I saw this candlestick form, I thought to myself, you know what? Today's been a really shitty day in terms of price action. And when price is really shitty, you don't want to take chances. So I doubled my risk with my intention being the second price goes up here, I'm just going to close my trade because I don't need to wait for 1R anymore. And I talked about this on Twitter, right? I'm not sure if anyone follows me on Twitter. I hope you do. If you don't, let me show you where you can follow me. I have a link right here. If I show you basically the tweet I made, I had a conversation with someone, I would probably say last week, and it was about, why Matt took this ES trade. And Matt took this ES trade and he took his TP early. And the question was like, well, why did you take it early? Why didn't you follow, the mechanical rules of 1R or 2R? I highly recommend for you to read this. I'm not going to go over this fully, but my only point about this was that we have to be able to understand not only just the market conditions in real time and the story it's telling you, but our own greed, okay? Imagine seeing $800 on the table and you make that in less than 50 minutes and you're not okay with it because it's not 1R or 2R, right? Like, if you're able to do something like that, like, think about how special you are. Honestly, think about how special you are to even be able to do something like that. Like, to be able to say you made $800, you literally are looking at $800 unrealized that you mapped out from beginning to end you executed perfectly and not being okay with it. Like, you really have to check yourself if you're not able to see what's happening there. Okay, go back, check this thread out. There's a lot of good conversation in here. Matt was quite vocal too. People ask some good questions. Just go back and read it. I'm not going to go through it. I think it's a good nugget of information. If you haven't read it, go and check it out. I don't want to spoil it for you. Okay. The thing for me though is I took the TP, doubled my risk to exit early. My goal was to take TP at the DQ anyways, right? I wrote BE here, but then I thought the reason I wrote BE here was I was like, well, I'll move it to BE and then I'll let price do what it's going to do. But then I kind of second guessed myself and I thought about the greed. I thought about, hey, I already have hit my daily like dollar goal. Like, I've hit it now. I'm well above it because I doubled my risk. Do I really need to chance this any further? Even though it could do it, do I need to be perfect, or am I okay that, hey, it's 11 a.m., price action has been absolute garbage, price delivery, luckily I'm able to even catch something because the 3-minute setup was the setup. But even by me taking this 2-minute setup, which is based purely off of intuition, I mean, there was no real liquidity sweep per se, like in terms of an ERL. The NWOG counts as a liquidity range, but there was no real ERL sweep. So, and I usually like to see those ERLs being swept, right? So when I saw the TP, I just took it. And because I took it, I've now secured my TP for the day. I'm 1 day closer to, obviously, payout. You know what I'm saying? Like, I'm just 1 day closer now to all the other good stuff that's in front of me. That's all this ever is about, is just, are you green today? Are you break even today? Or are you red today? Right? The goal with us trading prop firms is we don't want to be red, because red sets us back. Even though red's inevitable, right? Nothing is 100%. You're going to lose trades. But what you don't want to do is lose trades where you're breaking rules, lose trades where you're acting out of impulse versus logic. You know, getting red when you clearly saw TP on the table and you didn't take it because you got greedy. Even though you know the nearest strong liquidity already got tagged. This is the nearest strong liquidity. If price had reversed from here and stopped me out and I got nothing, I would have been like, oh man, it's just one of those days. I decided to just take it because I thought, if this does reject and go lower like it's been doing all day, hey, at least I have something to show for it. And like I said, I'm 1 day closer to payouts. You know what I'm saying? And if you're not at payouts, maybe you're 1 day closer to passing your eval, right? But you're green, and now you live to see another day. So while I took the TP, there's no ever telling what price is going to do. This thing turned out to become a monster. Did I know that this was going to happen? Of course not. Old version of myself would look at this and be very upset that I did what I did. It would actually put me on tilt, and then I would try to re-enter the trade thinking that, oh man, there's so much more about, like price action is going to go so much further and I'm missing out. And then guess what happens when that happens? Guess what happens? This is what happens. Imagine entering way up here out of FOMO and then you don't get anything out of it because you got greedy. So I'm just trying to say the market's going to do what it's going to do and you have no control over that. What you do have control over is observing what happened in the candlesticks prior to your present decision making and make high probable decisions based off of what you're seeing and putting or stacking those confluences together, like I said, to create a high probability setup for yourself. It's not sometimes just as simple as higher time frame on the 4-hour was bullish FVG, 50-minute swept Asia low, 1 minute had a liquidity sweep and a CISD entry. Like, to me, I feel like there's a lot more that goes into this that you need to be aware of. I've had to kind of go through other types of concepts to kind of help me stack things. I call them filters. One of the biggest filters I've ever come across that I've used that is just absolutely magical is the daily EQ. It's one of the most amazing things I've ever used because it has helped me stay on the right side of price action more often than not. Even if sometimes, you know, it doesn't do what it's supposed to do, it still protected me more often than not in situations where I got greedy and I wanted more. You know what I mean? So I'll just leave it at that in terms of that setup, because that was the 2-minute setup. That was literally the extent of everything that went through my head. Another thing I'll tell you, which is, you know, just once again, kind of going back to the why, okay? Because like I said, this 1 minute or this 2-minute setup itself didn't have the sweep. And I'm just gonna kind of say this as a, like more of a recap, okay? I didn't take it on the 3-minute because I was sticking to fundamental rules I had, okay? So if I go back to the 3-minute once again, and I show you where the 3-minute setup is, we have it right there, we have it right there. I didn't take it because prior to what ends up happening, this is what it looks like, right? This is what it looks like. NWAG is swept, there's no SMT. Well, sorry, there was SMT at this point, but not prior to it, like nothing on the left of it over here. If there was, that maybe made my decision a little bit easier, and maybe trying to enter on the 3-minute and giving it a chance because I'm playing that extreme of the range. But that didn't exist. It only formed here, right? And then I also, once again, I knew that the 2-minute had this right here. I knew the 2-minute was right here. So what that means is that even though the 3-minute looked the way it looked, what if price action rejects off this 2-minute FVG right here, which is, if you stack it once again, becomes the FVG. What that means now is that if the 3-minute works, then this 2-minute looks much more attractive. And then once it started to look more attractive and the 3-minute started to work, then I started looking at other principles, right? Other principles like support and resistance, right? Like I showed you with this once again. Okay, we have a clear line in the sand here. Nice breakout. I'm still not going to take this though because I just don't know. And I'm okay to miss it if I miss it. Then I saw this, right? I saw this candlestick and I thought let's take a piece, but then I saw this and then I thought, okay, for sure gonna really go for this now because I'm now seeing a story develop and it's showing me that this resistance level is being potentially flipped into support. And literally, that's it, okay? Stuff like this, you could teach concepts like support and resistance. You can teach, specific types of candlestick patterns and reversals, right? But in real time, like to have the intuition to put it together, it takes practice. It takes confidence. And, you have to not have fear in what you're doing. So like, if you have fear taking this trade, don't take the trade. If you have fear taking this trade, but you feel like you still should take, lower your risk. If you risk $300 per trade, don't risk 300, risk 150. Worst case scenario, you lose 0.5 today. But guess what? You didn't lose 1 R. You lost 0.5, right? The other thing I was looking at in terms of risk was I had my stop loss placed down here. But what I was really looking at was two things. I was looking at this SR level here, and I was looking at this FVG. So even though my full TP, my hard stop loss was here, if I started seeing price dip below here again, and then start to flip this back into resistance, I was gonna just exit my position. And then what that means is that my loss isn't even -1 at this point. It would have been less than 0.5. So I was okay with that. And then even though I had doubled my risk, I was still okay with that because my loss was still gonna be under 1 R. So understanding your risk, understanding how you are strategizing as you take the trade is so important. Practice makes perfect. Live trading is your best teacher. Backtesting will not teach you this stuff, right? Me showing you this on a live stream is probably going to help, but backtesting is not going to teach you this stuff. Because all you do when you backtest is you just click next, 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 next. Where's the feelings attached to each candlestick? Where's the time that it takes in between each candlestick for you to like interpret the information and see if it's telling you something more than just one candlestick, another candlestick, another candlestick. Do you know what I mean? So I hope all that makes some sense to you. We've been going pretty long here. I was going to talk a little bit about the daily trading coach. I really appreciate everyone's time. I've been, like I said, been going on about an hour and a half now. Usually like to try to wrap these things up in about an hour, but lots to talk about. And like I said, I am recording this. I hope it doesn't glitch. I will share it to YouTube. I'll just quickly go over a few things with the mindset strategy discussion here on the Daily Trading Coach, the book. Chapter 3, Psychological Well-Being, Enhancing Trading Experience. And like I said, someone had made some notes on Reddit. I just kind of thought, oh, this is pretty good. They've already got it set up nicely for me. But I'll just kind of go over a few things. So number one, emotional well-being fuels cognitive efficiency. We think best when we feel good. I showed you what I did on the weekend, right? And I'm not doing this to say, you know, it's not to say I'm doing something and you're not doing something. I'm just trying to show you that, like, I went and did this. I took this in. This is what made me feel good. You have to find something that makes you feel good and experience that, right? Especially when you have downtime. Do it for yourself. Get in touch with your spirit. Clear your mind. Fill your soul, right? Emotional well-being fuels cognitive efficiency. We think best when we feel good. So the Q, you can be content with your progress to date and still be motivated to move forward. The key is setting shorter and longer term goals so that you can bask in satisfaction when you reach an immediate objective, but you're still staying hungry for larger objectives. Why did I take TP early today? I took TP today because it became a short-term goal versus a long-term goal, right? I'm one step closer now to payout. I don't need to wait for 1 hour, even though it could have hit it, and it did. That's fine. I know what my long-term goal is, but short-term, I'm green on a Monday. Most people took stop losses today, and I already saw how price action was shit. Okay? Q, take short breaks from the trading screen during the day to renew concentration. This allows you to return with a new perspective and can lead to some of the most effective trades. You want to know what I did before I took that trade? Because I was waiting for price to do something and it just looked like nothing was happening. I went upstairs. I washed my face. I talked to my wife. I talked to my kids for a little bit. I brought myself a drink, and then I came down. Renewed focus. And then that setup happened, and I was able to think about things more clearly. Get up off your desk if nothing is happening on the screen. You don't have to just stare at the screen if nothing is happening. Set alerts. Use those alerts to your benefit, okay? A trading career is a marathon, not a sprint. The winners pace themselves. Taking TP early is you pacing yourself, right? Looking at the screen all day long, trying to trade every single session, all that's going to do is wear you down. And it's not going to just wear you down with your thought process with the charts. When you step off the charts and go into real life, you're going to be so screwed. And then that's not going to help you operate. And then when you start to have problems there, it's going to then transcend back onto the charts. And now you have a vicious cycle, okay? So it says here, it's not necessary to have a totally balanced life. Of course, a few of us do. But if your life feels unbalanced, that's obviously going to undermine your energy, concentration, optimism, and effort moving forward. And then it's going to end up being like rocks in a backpack that you have to carry with you every single day. And you're just going to keep putting these rocks into your backpack, and it's going to weigh you down. Okay? So another cue, if you structure your trading preparation like a workout routine, then every day you're adding a bit to your capacity to sustain intention. Diligent preparation conditions you to make extra efforts when it counts during the trading day when others may give up. When you put effort into trading development, you not only prepare your mind, your condition will. All of us know what this means, right? All of us have been to the gym. All of us have studied for exams at school, perhaps, or all of us have gone through training in a job, right, to study and learn. Maybe you had to take a test to get applied or to get hired into a specific job, right, or to get a specific license. Trading is no different. This is why every morning when I show up to the charts, the first thing I do is I map out my levels on my chart with a routine I have, right? The next thing I do is I go to my daily check-in in the 20 trade A+ challenge, 939, daily check-in. I tell you exactly what I'm doing, or I tell myself exactly what I'm going to do. I'm looking to long from sell-side liquidity and short from buy-side liquidity. I have my alerts set. I'm allowed 2 trades today. Emotional state, you always got to be in tune or in check with your emotions. I'm like, you know what? I felt like a 3 out of 5 today because I got to my desk late, so I was feeling a bit rushed. Okay, that's okay. Have grace for yourself, but don't trick yourself into thinking that these feelings aren't there, right? Like, put them at the front. Be aware of them. Self-realization. One of the biggest problems I've had recently, and I've talked about this previously in a previous live stream, was that I was over leveraging and it's causing me additional FOMO and panic. One thing I'll not do, I'm remembering this, I got to not over leverage. And the one thing I will do is I said I was going to wait for a clean A+ setup. And I literally did wait for a very clean setup. I watched the Asia long go. I didn't take it. Then I watched the DEQ short. That, it didn't hit TP, but I still watched it play out, and I sat on the sidelines. Then I watched that 3-minute long play out, and I still didn't touch the charts. Like, I still didn't touch the trade. It was only when I saw confirmation on that 2-minute setup that I said, okay, I'm going to hit the entry button here, and I'm going to now increase my risk based off everything I've already talked about, right? You could say, isn't that over leveraging? To me, it wasn't over leveraging because, like I said, the way I was going to play the position in terms of my stop loss, it wasn't going to be a full loss anyways. So if anything, I was just trying to be smart and be more efficient with my position size to get out early. And I did exactly that. And so to me, that was A+. Okay? My point is, preparation is key. Okay? You can do the same thing I'm doing, right? Just do it in the way that makes sense to you. So the aversion to boredom is the source of many trading problems. Access to intuition requires a still mind. Highly intuitive people are not bored, but stillness, and indeed thrive on it. This is kind of the thing that I had problems with, and I had mentioned this actually on Twitter, that I got diagnosed with ADHD late in my life. I'm in my 40s, and I got diagnosed with ADHD, of all things. But I'll be honest with you, it has really explained so much of my shortcomings in trading and in life. And because I didn't know what I thought. You're just living your life. Your life is what you think of it, right? Like, I don't know what it looks like to someone else. But you take specific types of meds or whatever to help you with dealing with ADHD, and like, I'll be honest with you, like, it's absolutely done wonders for me in terms of being able to just like it says here, access intuition through a still mind. If you have ADHD, man, your mind is running like a mile a second, and you are looking for dopamine, like nonstop. So I can tell you right now, and I'll just say this to you, like, obviously it's recorded, it's personal, but it's still relatable because ADHD is quite common now too, because of the screens and the lack of delayed gratification and stuff like that, right? Like, people have very, very short attention spans, right? So a lot of people even have ADHD just based off that. But I'm not a doctor, not a scientist. If you are experiencing things like this, go see your doctor for sure. So when you're your own trading coach, it's important to keep your mind in shape much as an athlete stays in proper conditioning, just as you prepare for the day's trading by studying the market, right? Reviewing charts, identifying areas of opportunity. It makes sense to engage in mental preparation to build the mindset needed to capitalize on your ideas. Now, one thing I'll tell you is if I go to my profile here, let me just go down for a second. There's something I want to show you, right? I put this, where did I make? Let me find it. Hold on a sec. Oh, where did it go? I made a post about daily routine. I'm just trying to find it. Where is it? Oh, right here. Okay, so this is literally my trading routine. Okay, I'm at my desk, ideally 8:30 to 9. And this is the part about the mental preparation I want to talk about. For me, I listen to devotional mindset content. I listen to, I listen to Bible study. I listen to words of encouragement. Les Brown comes to mind. And if you want access to any of these things that I'm sharing, I'm not trying to push Christianity or anything like that. But what I am trying to push is positive thinking. And that's why I share stuff like Les Brown, right? This is why I share stuff like people who have made like posts and things like that that speak volumes to a more general capacity. Les Brown to me is goated, man. And this right here is, like, I listen to this a lot throughout the week, and it's repetition, but that repetition is what's going to help rewire your brain and start helping you rewire how you perceive things in your life. And like I said, it's possible, man. Les said it, it's possible. Anything is possible. So check out my tweet, it's there. This is literally it. Let's see, what else is there? The most effective way to build emotional resilience is to undergo repeated normal drawdowns and see in your own experience that you can overcome them. I think this is very key because I've often heard people talk about how, like, if they're doing set and forget type approaches, they'll set the trade, they'll set their TP and their stop loss, and then they just walk away from their computer and then they wait for the alarm to hit or the alert to fire off, and then they come back to their screen. But the problem with that for me is if you don't trade like that, then what do you do? And the only way you're going to survive is by putting yourself in situations where you have to experience this type of stuff. The way I filtered or combat that is, once again, I use basic concepts like support and resistance. I use ICT concepts like FVGs and sweeps and SMT. I use retail patterns to see like this one, tweezer tops or tweezer bottoms or morning stars or evening stars or bullish engulfing or bearish engulfing. I use all of these things to help me read the price action when the price starts to tell its story and move, right? So as price is moving like this, even if I'm in the position, I can still observe what price is doing and make some sense out of what it's doing, because that helps me. So now what that's going to do is it's going to help offset the emotional fear or the panic that I might have if I didn't understand what was happening. So this is why I say it's so important to understand what you're seeing on the chart at all times so that you don't have FOMO or panic take over. You're obviously you're human, you're gonna have FOMO and panic, but what I'm saying is if you can mitigate the depths of that, those negative qualities, you're gonna be better off for it. So it's much easier to stick with a trade when there's a firm target in mind, just as it's easier to get work done when you have a clear goal in mind. Think about my TP today, right? My TP was this. No matter what, I said, I am taking TP at the daily EQ or around the daily EQ because I don't know what's going to happen here. That was my goal, and I exited at that point, right? Stick to it. Right here, Q. If placing trades is a source of stimulation, you're bound to overtrade. This is where I talked about the ADHD thing, right? That rush of dopamine is stimulation, right? Like, and it does create problems of overtrading, of trying to overcompensate for something that you screwed up on or that you missed, right? So that can be really, really tricky. Now right here it says, we did this part right here, it says here, okay, traders often think that they're managing a trade when they exit prematurely, when in fact they're managing their thoughts and feelings about the trade. So this speaks to the panic and the fear, right? And the difference between this, like exiting a trade based off of those contexts versus how I took that trade and I said, I'm exiting here, I'm not waiting for 1R, was because for me that was the goal. And I already know for me on a technical perspective that the DEQ is a key support and resistance level, and that is a draw on liquidity for me to take TP at, right? So that's the difference. Now, if that wasn't there and I just start randomly closing the trade while price is literally in the middle of nowhere and it's still moving, yeah, well then, that's a bit of a problem, right? Because now I'm exiting off of panic and fear versus using technical logic and sticking to, I'm assuming that there would have been a plan in place there, right? Like, I'm not going to take TP here. My plan was to move my stop loss to break even once the nearest drawn liquidity gets hit, maybe skim some profit, or close the trade fully. You know what I'm saying? So Q, think of your best and worst coping patterns as being sequences of actions, not just isolated strategies. This allows for the development of mental blueprints for the actions we need to take in the most challenging market conditions and ensure that trading stress does not generate performance-robbing distress. So a lot there to unpack. I think the whole idea here is you need to kind of understand yourself so that you're able to like activate a specific mode of operation based off what you're seeing transpire on the screen. So if I see price action starting to chop around, like let me go back to, it's just a way easier way for me to explain this to you. Where is it? Okay, right here. So like if I go back to something like this is that trade I was talking about that Matt took last week where he took TP. But like if I start seeing price delivery not being like a smooth, clean, momentous move higher to the TP, I have to adjust my mode of operation, right? Because I have to react to what the market's giving me. And this is why I always say, like Bruce Lee says, be like water, right? Because in the event that it's not going to be a quick and easy 1 or 2 minute IFVG, entry to TP type thing, I have to adjust the mode of operation and I have to account for that. But you have to be aware of yourself to know what that mode is. And the only way you're going to understand that mode is by putting yourself in these types of situations to begin with, because that's what's going to develop experience, that's what's going to develop intuition on the charts. Now, I'm not saying go take $500 trades and try to learn how to experience this stuff. Do it with like 1 micro. Practice it with low amounts of money first, then start to scale up higher once you start to get more in tune with yourself, okay? Yeah, other than that, that pretty much covers everything for today. Man, I really appreciate everyone's time today. Thanks for sticking around with me. Imran, I just kind of come back to the chat. He said, I'd seen most of the times reversals happen around 10:30. And this goes to show you that if you're trading in a kill zone, and we'll take New York AM as example, if the window is 9:30 to 11, don't give up at 10:30. Don't give up at 10 o'clock in the morning and go, oh man, because price action is looking like this, price action is looking like this, therefore I'm just going to shut the shop, like close the computer, shut the shop down, and I'm just going to move on with my day. What are you doing? Your shift is not over. Anything can happen between 9:30 and 11. Like Imran said, reversals tend to happen sometimes around 10:30, right? And then you could count that to ICT macros or whatever, right? Like there's so many different terminologies and so many different types of discussions around these times. But to me, I look at it very simply: 9:30 to 11 a.m. That's my window of operation that I'm trading NQ futures. Okay, so if nothing is happening at the open, fine. If nothing's happening at 10 o'clock, fine. If nothing's happening at 10:30, fine. But guess what? If something starts to happen at 10:45, like I entered my trade at 10:50 today. But guess what? 9:30 to 11. Anything is possible inside of that window. Don't ever give up on what you're seeing. Just show up every day, sit through this bullshit. By sitting through this, once again, you're building experience, you're building awareness, you're building modes of conduct within yourself, how to operate, right? You're understanding how price moves when it's going to be choppy or hard mode. If you show up every day and study NQ, you're going to be so much further along in understanding like how NQ operates and it's like isms because you just sat there and watched it. And granted, like I said, you got to get up off the computer and do other things, but if nothing is happening and then if an alarm hits, you come back. But when you come back, you're still putting yourself through the journey of whatever price is doing in between 9:30 and 11. And like I said, I did that today. It's clear proof of what I'm talking about. I put my money where my mouth is. And this is why I have my channel. This is why I share what I share inside of my channel, like throughout 9:30 to 11, because I'm just trying to show you, like, I'm going to be here every day to trade as long as I can, of course. And I find by posting stuff like this, it also helps keep me accountable too, right? And this is another good reason why you should go to the discussion channel, go to the personal threads thread, and create a personal thread for yourself and start posting. Just start posting things. Like, it's not about who's following you. Like, that's not why you do it. You do it because, like, it's going to help keep you accountable by posting your thoughts and getting it out there. It's going to help you to understand what kind of a daily routine you want for yourself when you show up to trade. Everything that is built in this Discord to me is like, honestly, it's like a recipe for success, in my opinion, because it's like, it's just totally invaluable. It's going to teach you things about yourself. This is why I started the 28 plus trade challenge. I don't know any other Discord that's doing something like that. And maybe there are. I mean, I would never say I'm the only one that is doing something like this. But what I'm saying to you is, it's not so much about like not knowing if someone else is doing it. It's just letting you know that you have this available for yourself to help you grow, and it's free. And the only cost of entry is your time, your energy, your effort. What's the worst thing that happens? Right? What's the worst thing that happens? Think about that. There is literally no downside. There's only upside. It's only going to help accelerate your growth. So this is why I started 20 Trade Challenge, because I wanted to put myself through it, and I wanted to share that with other people to help them also experience it and grow. Now I'm sharing with you about creating personal threads. Just do it for yourself. Like, that's what I did back when I first found Matt a couple years ago, and the Discords were very different back then. And like, I started my personal thread because I noticed a lot of the traders that I was looking up to had started personal threads. And those guys had hundreds of followers, and those guys had, you know, massive winning months, right? I didn't. I was losing like crazy. But I started my thread. And what's really cool about it too was, like, the first person that followed me was Matt. He was the only person that followed me back then. But that's okay, because it wasn't about, I wasn't looking to, I wasn't looking for any sort of exterior type of like acknowledgement. I was trying to become a profitable trader, and I was trying to emulate the people who I saw doing things that I wanted to do. Like, they were in places I wanted to be. So I'm like, if I emulate what they're doing in my own way, it's just going to help me get one step closer. This is why we're doing what we're doing. This is why I have a daily trading channel, and I post what I post. It's just merely to show you where the bar sits and what you could do to help you get from where you are to where you want to be if you've not done something like this. So I hope that helps you. Imran, I really appreciate all your kind words, brother. Honestly, I really do, man. I appreciate that. So moving forward, I will be back, I guess, I think I'll be back on Thursday. I think that's what, let me check the schedule. Yeah, so I'll be back on Thursday. I got some things I got to do Tuesday, Wednesday, but I'll be back on Thursday. I have here 12. It's just like a placeholder. I've been trying to stream earlier, which is why, like, I started 11:30. So keep that in mind. I'm going to try to start streaming a little bit earlier, even though I have 12 here, but I'll start streaming earlier. And then, yeah, we'll see how this week unfolds. And hopefully we get some better price action than what we had today. Take some time to look at your journal. Take some time to, you know, read over the 20 trade challenge. Take some time to create a personal thread for yourself, right? Help yourself improve. There's means and there's methods here available to you. If you have questions, you can obviously DM me. And if you're listening to this for the first time on YouTube, I appreciate your time. Highly recommend for you to join the Discord. It's free. There is a premium side to this, but that is Matt's premium thing. I don't have a premium thing. I just have a free section, channel, whatever you want to call it, and I'm sharing as much stuff as I can right now while I can. I don't know what the future I don't know what the future holds for me personally in terms of the things I share and how I share and the way I share. I don't know what the future holds. I've had people ask me about, like, hey, you should start your own Discord, or you should do this. And, you know, I've thought about it, but I'm still kind of mulling it over, because there is a level of stress and a level of discipline and a whole bag of worms that comes along with, like, running your own Discord and live streaming every day and things like that, what you offer people. So right now I am very comfortable with what I do and how I do things. It's working for me. And if something is not broken, why are you going to try to fix it, right? So I'll leave that with you for now. I appreciate everyone's time once again today. Thanks for showing up. This is recorded, so I'll get this posted on YouTube. I'm going to slowly start unlocking all the live streams on YouTube, so it'll all be there. You can access it whenever you want. Yeah, other than that, peace out, folks. Have a great rest of your day. I'll be back in the morning, and God bless you and your families.